Afternoon, everyone. Thanks for joining us today. I think we have a very exciting and very timely event this afternoon, and that is we're previewing the new Asia Society Policy Institute-Rhodium Group China Dashboard. This project marks the culmination of a two-year partnership between ASPI and the Rhodium Group, and it tracks progress on the comprehensive economic reform program announced by President Xi Jinping in 2013. The idea for the dashboard, interestingly enough, came in 2015 following an interview that Chinese Premier Li gave to the Financial Times. And at that time, he invited Chinese and Westerners alike to score China's progress in implementing the reforms that it announced in 2013. And that's exactly what we're seeking to do through this project. Through this project, we're trying to bring hard data to the discussion on Chinese economic reform in order to better understand China's progress in fulfilling its own reform pledges. We are not evaluating these reforms based on US expectations. We're evaluating the reforms based on what China pledged to do. It's an online interactive web tool that will be updated on a quarterly basis starting in early November, and it can be accessed at that time on our website. It looks at reform in 10 key policy areas, including such core issues as financial reform, fiscal reform, trade, cross-border investment. And it also includes areas that are also central to economic reform, such as labor, land reform, SOE reform, and competition policy. And in each area, it will provide a key quantitative indicator of reform progress with supplemental indicators to round out the picture. In keeping with the mission of the Asia Society to bridge build between the United States and Asia, our dashboard is meant to help policymakers, businesses, and China observers to better understand both the pace and direction of Chinese economic reform. Gaining a better understanding can lead to better informed policy and business decisions. For example, experience has shown that it's often easier to press for market access in areas that are under reform. And given China's large and growing role in the world economy, its reform process has an incredible impact on global economic growth, on international trade and investment flows, and global overcapacity. Just where Chinese economic reform stands today and where it is headed is still an open question. And as you'll see shortly when Dan Rosen comes to this stage and he previews this new tool, reform in China is a mixed picture. And finally, let me just say, with China's 19th Party Congress set to convene in just a few days, there's really no better time to discuss the reform process and prospects for further reform after the Congress. So without further ado, allow me to invite to the stage Dan Rosen to preview the dashboard and share some of the key indicators that will be used to assess progress on the reform front. Dan is a former senior advisor for international economic policy at the National Economic Council and National Security Council. He's a founding partner of the Rhodium Group, where he leads their work on China. He's a close friend of ASPI, where he is the Jack Wadsworth Fellow, and he is just a true expert and a real teacher with respect to the issues at hand. Following Dan's remark, we'll then introduce a panel of distinguished experts in this area to further discuss both this project and the broader issue of China economic reform. And with that, I'll turn the floor over to Dan. Thank you. I don't know how you're going to get up here.
Wendy, thank you very much. And I want to thank in advance the panelists who've come to join us for this conversation, and for all of you for being in the room to see this preview of the fruit of 2 years or more of labor between Asia Society and Rhodium to try to make a positive contribution. As Wendy said in her introduction, it is very much China's construction. Xi Jinping used it in 2013 when he unveiled the Chinese reform program called the 60 Decisions, and Deng Xiaoping had said it a generation earlier in 1992, that if China does not reform and open up, does not continue making progress in terms of transforming its economy, it would find itself in a silu yitiao, a dead end or a blind alley. That is as stark as it gets. That there are things that need to be done to further transform the way the Chinese economy works. If that succeeds, we have a lot of good implications to consider. If it doesn't, we all have a lot of challenges to deal with, China and the rest of the world as well. 2015, Premier Li, as Wendy mentioned, said quite clearly, China invites foreigners who have a stake in China's success to join in the process of evaluating Beijing's success effort at implementing the broad reform program that's been put on the table. We think about the stakes that are tied up with those reforms. On this chart, we have 2 bars in each color. And those bars, the first of the 2 is the year 2000. The second is the year 2015. And they show China as a share of global totals. The first yellow bars, Chinese people as a share of all population in the world. Around 20%, coming down just a little bit, 2000 to 2015. In orange, the next pair, gross domestic product, China's share of the world economy writ large, less than 4% of the world in 2000, and today around 14%, 15% of total global activity. The bars in blue there for imports and exports show a similar tripling of China's global share in trade flows. And that, of course, is the China story of the past decade and a half of our lives as policy watchers here in Washington and elsewhere. We've lived through the China price, the China shock, the both tremendous value created for consumers around the world and dynamism, but also the adjustment challenges that came about due to Chinese trade flows. Skip over to the other side, the far other side of the chart on the right, and those purple bars that haven't even sprouted up yet are portfolio flows, flows of investment money out of China into global stocks and bonds, and from world portfolios of savings, our Fidelity and Wellington and Vanguard accounts, if you will, partly going into China to buy securities in that growing market that will return a healthy dividend to us over time as investors. That shows that the China shocks have yet to come. Whether those purple bars end up being like trade, tripling, quadrupling in the years ahead or not, have so much to do with whether China is able to fulfill its own reform plans. In fact, reform is the wellspring of China's gross domestic product growth outlook for the years just ahead. These are a variety of different projections of what China's GDP is likely to be like now to 2025. This is always a speculative exercise. The less speculative one is the dotted line up at the top, which is the IMF's projection, a fairly conservative estimate, just out to 2021, showing China being able to hold up between 5 and 6, or even a bit over 6% GDP growth. The Economist Intelligence Unit is the other dotted yellow line, which, assuming that there's reform, expects a very significant dip in GDP growth next year in 2018, followed by a recovery created by that reform and that short-term pain, leading to longer-term betterment. The 3 other longer-term lines are mine. They belong to Rhodium Group, and they describe different scenarios. If China really is able to get its reform work done, there's no reason why it can't continue to turn in very strong 5% on average growth now to 2025. But without that reform, it's very hard to see a recovery in Chinese productivity growth rates, which would leave only the extensive investment being made by government-related entities in China today, which would mean by the end of the period, maybe a 3% GDP growth story. The bottom line there is if even the investment starts to slow down because people are not confident investing without that related productivity that comes from reform. And there we have very dire projections of what the numbers would look like. So these reforms matter immensely. If China gets it right, it's going to be a shock that we'll all have to deal with in terms of growth and competitiveness. If China doesn't get the reforms done, it's going to be a shock as well, but it'll be more downside recessionary shocks and consequences we'll have to deal with. There used to at least be something of a consensus, including here in Washington, that China was moving toward this reform package that can be found in Chinese planning and in Western assumptions and think tanks like this one and those across the street and next door going back decades now. The problem today is that the confidence that it's just a question of how long it will take, not a question of what the direction of reform is, that confidence is broken down, as we can all see. So essentially what we're trying to do here is provide an objective basis to rebuild confidence that convergence toward a shared set of reform policies that we believe make for opportunities for us to work together, China, the United States, IMF, everyone else out here, that consensus can be rebuilt. So I'm going to show you 4 out of the 10 reform gauges, if you will, that we've built into this dashboard that will launch fully on November 2nd. The first is innovation policy. We don't think of innovation policy as traditionally being a big part of the American policy package, I have to say. But in China and many other emerging nations, and some European as well, Germany, for example, is considered a core part of central government responsibility to have a policy for innovation. When we gauge something like innovation policy reform status in China, we are not asking, do we, from an American perspective, like the way China is doing its innovation policy? What we're asking is there evidence from Chinese performance that China is becoming more innovative, that it is adjusting its economic mix of what it does so that it's not just making socks and underwear, but more and more of the output of the economy is in innovative sectors. That is what will correlate with strong Chinese GDP growth in the longer run. We may or may not like the policies being used to get there, but that's another question. Our question for today is there adjustment taking place we can observe that helps us see whether this one is being done? And indeed, that yellow line at the bottom, what it's showing you is total industrial value added. It's an economic concept that we define in the methodology to this study. Value added for the Made in China 2025 sectors, those which have been labeled as innovative by China, whether their share of value added is rising as a share of all industrial sector value added. Pretty flat until 24 months ago. The past year and a half or two, that has really started to kick up. And we see a rapid growth in the share of the innovative sectors in China relative to all industrial activity in China. So much so that the first dotted line in red there is the equivalent US level of industrial value added for those industries. The green and blue are the European Union and Japan for comparison. So we can see, sort of put it in context. Well, okay, so we see the slope of where China is. How close or far is that to advanced economy levels? And what this is telling us is that actually China is pretty close to advanced economy levels right now. We have to ask ourselves, as reflation of old steel and industrial prices in China has been achieved as part of China's stabilization package this year, that's actually going to push up the share for the not so innovative sector. So we may see this line start to flatten out and even come down a little bit in the quarters just ahead. But certainly we have a sense of how quickly China could move up into more advanced levels of innovation as a share of all activity taking place in that economy. Next, I want to mention something from my friend Marcus and the IMF, close to their hearts. We need to know, how is China doing at reforming its financial system at home? The financial system in China is the foundation of growth in so many ways over the past 4 decades. The ability of the state to help direct and shape where credit is going has been instrumental to building out the infrastructure that has paid such returns, such dividends to China's growth, for example. But it also has given rise to the debt levels that many people are concerned about today. To provide an acid test, a quick but fairly reliable picture of the state of financial system reform in China today, we're looking here at the efficiency of that system. The IMF would probably, if it could only have one metric, would look at a risk mitigation metric rather than an efficiency metric. But people in the finance sector are probably more likely to look for efficiency of financing if they can only have one chart. We went for the latter. So what this is showing us is very simple. How many renminbi must be invested in the capital stock of the country to create 1 renminbi of output growth, of productive output growth 2 quarters later? IMF's basic benchmark for international good news is 3 to 4 should be that ratio. China was in the vicinity of 4 to 5 7 years ago. Today is above 7. It's taking more and more and more capital investment just to get the same amount of valuable output being created by the economic system. That is not sustainable. That's a problem. Tiny bit of good news in the most recent data available that will go into this first quarterly update, data which goes through the second quarter of 2017. We had the first downtick in this incremental capital output ratio in more than 12 quarters. That's a sign that something right actually does seem to be happening in the Chinese financial system. The People's Bank has been leaning in very hard to control liquidity growth, to slow monetary liquidity growth in the system. And sure enough, it's showing up in our indicator here in a positive way. Another topic of great interest to everyone, state-owned enterprise reform in China, or rationalization, if you think reform is too generous a term. Westerners often over-project onto China their own sense of what SOE reform should mean, what state enterprise reform should mean. The reality for Beijing is that the government really doesn't intend and has not promised to withdraw itself from all industries of the economy. In fact, in most economies, including the United States, there are at least a few sectors where the government retains a place for itself. There can be natural monopoly arguments. There could be public good arguments. We could be talking about utilities that private sector interests are just not likely to want to get excited about and step in and do without some government involvement. So we're not judging them across the whole spectrum of different industries. Instead, we have separated out those industries which are defined as key strategic industries in China. Defense would be an obvious example. In blue, in green, the pillar industries, where Beijing argues it still needs an industrial policy to help industry get to the point where it no longer needs government support. And then a set of industries we call normal, in the red line down at the bottom here, where nobody's ever made a case in China that there's anything special about that sector that requires government involvement. Retail, consumer goods retail, after all. Hotels, entertainment, these kinds of things that don't really have much of a strategic purpose. And what we've done is using data from listed companies in China, firms that trade on China stock exchanges, we're looking at the share of total revenue among those firms that's still earned by state companies, by SOEs. We don't expect the SOE share of revenue to disappear in the key industries. In the normal industries, we do. We did see a step down a couple years ago when some SOE reform and the mixed ownership plan was first introduced. But since then, we've really been going sideways. We haven't yet started to see a real rationalization of the SOE revenue streams that we can identify. It's not everything that we need to talk about when we talk about state enterprises, but it is a pretty good acid test. And we should see these lines move once SOE policy reform does get into a higher gear, hopefully in the near future. Finally, in terms of the preview I wanted to put on the table just for our discussion here, I'll mention labor market reform and shared welfare. Chinese development economists are some of the finest in the world. I've had the honor to interact with many of them. And there are reasons to be both excited about income gains by Chinese workers over the years, and also reasons to be quite concerned. The least politically empowered segment of China's labor force, of course, is the migrant workers who don't have formal rights to reside in cities, get social services, make sure that they get their paychecks from potentially abusive employers, things like this. So what we've done here is we've honed in on wage growth for migrant workers, separate from the green and blue lines, which are workers and their wages at private and state-owned enterprises. And we look at them in comparison. A few years ago, all three of those groups had similarly good wage growth, and they were all above the dotted line. The dotted line is GDP growth at present, projected back. So if workers are doing better than GDP, then workers and labor are on the net winning side of the economy. If workers are seeing their wages grow slower than GDP, then they're not keeping up with the growth that somebody's enjoying in the system. We have lag in data for most of the workers, but for the migrant workers, we actually have quarterly updated information that we can use to do this chart. And we see that over the past 12 months, actually their wage growth has fallen down below GDP growth quite significantly. It's only 70% of the rate of GDP growth today. That needs to be remedied to make sure China stays on track to breaking through the middle income ceiling and having enough labor to fuel its rise into the future. Last slide here. I'm at my 0 mark, right on time, I think. I want to just describe to you a little bit more what is in this dashboard that will be available for everybody to use as a common framework for thinking about how China is doing in terms of its reform agenda. For each section, and here we're looking again at labor, you'll start with this primary metric. If you could only have one thing to look at, what should you be looking at? That primary chart up at the top left here. But there's also going to be a short text of 1,000 words or 1,500 words with some supplemental chart work that helps to broaden out the discussion a little bit and helps the reader understand some of the other key metrics that are important for evaluating that issue. In the text, we'll have at top a very short assessment of, are we moving in the right direction, standing still, or backsliding? Hopefully not too much for each one. We'll have a discussion and an interpretation of the metrics for the quarter. We are only looking at outcomes here. So even if there's great policy talk about reforming labor, that will not be in our metrics, and we're not going to give that any credit in our top-level analysis. We will, however, have a policy discussion that points to the things that could be foreshadowing improvement in performance in the quarters ahead. That's the policy discussion. And finally, there's detailed methodological notes with each of these clusters to help the user understand the choices we had to make, hundreds and hundreds of hard choices, often in consultation with friends in China in economics, friends at places like the Fund here around town, and some of you here in this room as well. So that's what we're all about here. At the end of the day, we will succeed if we've taken a conversation about working with China that today is more and more about fear and conjecture and anxieties, and instead bring it back to an objectively based conversation where we all can reference the same observable trends in how the economy is moving as a basis to decide what our long-term opportunities to work together look like. Thanks for letting me share that introduction with you. And Wendy, I guess we'll move to the panel now. Thank you.
Yeah, you tell your name cards here.
I'll be the first out the door.
I mean to cut you off there, Wendy.
If there's a riot.
Thank you.
Hi. Hello again.
Well, thanks so much, Dan. I think that gives a flavor to everyone of how detailed and how thorough this work is and how much thought has been given to each area. Dan has only previewed 4 of the 10 areas, so we hope you're really interested. And now you're going to be really excited until November 2nd for the official launch, when you can look at all of these areas at the same time. And to emphasize, these will be updated on a quarterly basis. And they will be, it's really an online tool. We're not physically, publishing reports. It will be up to the user, the policymaker, the business, the China watcher, to go on our website and to track these reforms. As you can see, we've got a great panel here to discuss not only the dashboard, but the state and the prospects for China economic reform. There were bios on the table outside, and let me briefly introduce my colleagues on stage with me. First to my left is Dr. Marcus Rodlauer, who's the Deputy Director of the IMF's Asia and Pacific Department. He oversees the fund's China team, a position he's held since 2012. He's worked at the IMF in a variety of positions over the years, and earlier in his career worked at the Ministry of Foreign Affairs in Austria. Welcome. And to my right is Minister Zhu Hong. He's the Minister for Commercial Affairs at the Chinese Embassy in Washington. He's a real trade guy, and the more I read your bio, the more impressed I am with your background. You've served at the WTO mission for China, and you've also negotiated a number of FTAs for your government, and you joined MOFCOM, I believe, in 1983, when that wasn't its name, but right now it's called MOFCOM. And finally, I'm pleased to introduce a former colleague of mine. I had the honor of working with Erin Ennis when she was at the Office of the U.S. Trade Representative in our Congressional Affairs Office, and then working on Asian issues. Now she is the Senior Vice President of the U.S.-China Business Council, where she directs the Council's government affairs and advocacy work for member companies. And she really brings the business perspective here today, which I think is very important. And of course, Dan is on the stage too, and I'm sure he will have a lot more to share on these topics. So I'll start, moderate, ask some questions, and then we'll turn it over to you all in the audience. So please start giving thought to what you would like to ask this panel. Let me start with my colleague to the left, Marcus. At the start of his tenure, President Xi Jinping presented a comprehensive economic reform agenda for China. After 4 years, what is your assessment of the agenda? In your view, where has the most notable progress been made, and which areas have fallen short of expectations?
Thank you, Wendy, and thank you, Dan, for inviting me. Asia Society, I just learned a new acronym, ASPI. Policy Institute.
This rolls off your
always
tongue.
Does great work, and that is a great initiative. Thanks also for putting this panel together. When I sent out the preview that you sent us to my team, which is a tough bunch of fellows, I tell you, what I got back was unequivocally great stuff. Very innovative, quantitative, very useful. So thanks for doing this. We will certainly follow it very closely. And we kind of agree with most of what's in there. Let me just maybe, since you asked, how do we see progress in China over the last 5 years, 6 years since Xi Jinping first put down his program? Let me answer the question in at three levels. First, looking at the big picture of structural transformation in the economy, which is, we've dealt with this at the IMF for 50 years, how to measure progress of a reform program. You can look at it from at a very aggregate outcome level. You can look at it at sort of more proximate outcome levels of policies, which I think what you're doing. You can then look at it, in terms of actual policy implementation. What are the measures that have been taken? in all these levels, it has its benefits and it has its drawbacks. So let me start by an overall view of the structural transformation. Then I will talk a little bit about policies, and then I will mention one new thing, which really I think is quite dramatic that's happening in China. Structural transformation of the economy. I think we have 3 or 4 really big areas of progress that one cannot just overemphasize. First, this huge transformation of the economy from an export-oriented, external demand reliant economy to one that's based on domestic demand. The reduction in the current account surplus to now way below 2% of GDP, from one that has been flooding the world with goods, to flooding the world with liquidity, flooding the world with problems and importing labor and jobs into China. I think that really cannot again be overemphasized, and that this is continuing. Second big, and it has continued under Xi Jinping. Second big change that we see, the shift from industry to services, again has continued. Now services now are over 52% of GDP. That was 45 when Xi Jinping took over, and it was about 41, 42 just 10 years ago. In a large economy like China, to see that kind of structural change, 10 percentage points of services versus industry, is nothing short of dramatic. And likewise, we also see that, you know, one of the core sort of original sins of what's the problem of China today, the huge amount of savings, the excess amount of savings, too little consumption, people not able to spend, not willing to spend because they fear they're not safe. That also has come down from 49 to 45% of GDP. And I think, you know, these are really major structural changes that are happening under Xi Jinping, also in the right direction. Now, 3 things that are not so great. And the one that is foremost on our mind, of course, is the debt problem. The fact that public and private debt has risen from 180% of GDP at the start of Xi Jinping's government to now over close to 270% of GDP. 90% of Chinese GDP, which is $10 trillion plus of debt added into this economy over the last 5 years, is a problem, and is a mounting problem, and is just beginning to be addressed. And so that is perhaps the biggest shortcoming under Xi Jinping's agenda that we have seen, and, you know, trends are still going up. Second, the footprint and profitability of SOEs really has increased, in the sense the footprint and the profitability has weakened further in the 5 years since he took over. Now SOEs are, you know, the assets are over 200% of GDP. That's up from about 125% of GDP at the beginning, prior to the Asia crisis. So this large footprint of the state-owned enterprise sector, this whole impetus that really the growth and development in China has to come from the state sector, seemingly is in our view a shortcoming and a negative aspect. Linked to that is the overcapacity problem. In a lot of talk in recent years about addressing overcapacity, but when you actually look at the numbers in the coal sector, steel sector, non-ferrous metals, cement, flat glass, and so on, you check the numbers of China's market share in global markets in these industries, they're all around half and even more, and have gone up. And the capacity utilization really in those areas has gone down. So not only have these overcapacity sectors over the last 5-6 years gone worse in terms of their profitability and the dead weight and that they're putting on the Chinese economy, but they're also exporting the problem to global markets in terms of excess capacity and price pressures and so forth. Again, you know, maybe more talk than action in actually really addressing it on a net basis. And the third point where things really have fallen short of expectations is the whole question of local government financing, fiscal management outside of the central government budget. You know, you look at the numbers, you are even more dramatic than ours. You put the total fiscal deficit, I think, around 16% of GDP. We see it at around 12% of GDP deficit of central government plus local governments and other non-central government fiscal entities. They are constantly adding to debt and to inefficient investment. So, you know, even though there was the budget law of 2014 that was supposed to radically discipline this sector, in reality, This has not really happened. In fact, we have seen the non-central government deficits go up. And there's various good reasons for that, but I think that's certainly a problem. Now, on policies, a few words. And that's maybe, you know this very well, looking purely at these kind of outcomes the way we do here, and sometimes in the IMF, fails to understand what's going underneath or what's beginning to happen possibly underneath. Look at it in the financial sector. The last 3 quarters have seen a dramatic shift in China in a real new focus on financial stability, tighter supervision, disciplining the shadow banking system. And we're beginning to see it sort of in the numbers of credit and of leverage and of corporate debt and so forth. It's sort of bending, and you're seeing it bending down a little bit. But we really see in terms of the policies a more dramatic shift than what the outcome numbers that we see here show. We hope it will continue. So here really it's very much a glass half full, half empty. And it depends on whether you, and that's one of the key issues that we'll see after the Congress, will this continue? Likewise, as I've mentioned on the local financing framework, even though in the numbers, the fiscal numbers and the quasi-fiscal numbers have not improved, have actually gotten worse, the policy framework that is being put in place by the budget law and through various other things are laying the groundworks, if it's continued, that it could really, really improve. Third big improvement we have seen on exchange rate management and the balance of payments. China almost was sliding into a balance of payments crisis 2 years ago. They have, I think, managed it quite well in terms of moving away from the dollar peg to a somewhat more flexible management of the exchange rate, while disciplining capital flight. And then I think also quite a lot of progress in areas that we don't really look at, but when I look at the HOCO policy, the one-child policy, the anti-pollution policies, green finance, there's a lot of very important policy steps that are underway that go in the right direction. Third one, I'm overstepping now my time, but I don't want to stop before mentioning the real big news for me over the last year is China's private sector, especially in the high-tech industries and in the higher value-added industries. I think what's happening in China over the past 2-3 years, you have alluded to that, the way how China is moving up the value-added chain in industry, in services, the way how this combination of a huge domestic market, very enthusiastic consumers and investors, a good ecosystem, both in terms of physical infrastructure, but also in terms of government policy, and a very supportive government, how this is creating a cocktail that is really quite explosive in a positive way for China to move very rapidly up the value-added chain and create and really set the stage for high-tech China digital globally, of what is happening in this key sector, which will, in the end, I think, as you said, dominate and decide how China can increase productivity and grow into the medium term. So overall, I'm actually quite optimistic. When I see where the glasses are half full, half empty, where the government is moving, the results that have been achieved, the underbelly of the economy, this huge private sector that is vibrant. I'm cautiously optimistic that all of this is going in the right direction.
Good. Thank you very much. You've put a lot on the table for further discussion. Minister Zhu, maybe I can turn to you. When you look at the reform pledges that were announced 4 or 5 years ago now, how would you assess the progress? And do you want to respond to any of the points that Marcus made with respect to areas where we've seen a lot of success and progress and promising policies, but also some of the challenges that he mentioned as well?
Thank you, Wendy. Thank you for inviting me to this panel discussion. And I would also like to thank Daniel for your introduction, and thanks for your hard work in research. And I'm very happy to be here to share with my views on the China's reform programs. 4 years ago, China has started its new reform programs under the leadership of President Xi Jinping. after the third plenary session of the 18th Party Congress. And from that on, the central government take a very strategic role, play a very strategic role in guiding the whole China's reform program. I think the first one is so-called the super design. The central government established so-called the Central Leading Team for Comprehensive Deepening Reform at the central government level. And at each of those corresponding government level, all the #1 guy in each of those province or cities, they are guiding the task of reform. That is the advantage of China's leadership systems. So in those 4 years, there 38 meetings was held by President Xi Jinping, and issue 239 policies in those meetings, and review 30 policy in those meetings. More than 1,500 reform measures have already been implemented in the field of SOE, fiscal and taxation, financial institution, rural land arrangement, and so on and so forth, developing a new open economic system, education, healthcare, judiciary, and ecological civilization. Many of those long due problems were resolved, and we can say that expected progress was made. Now we can review the past 4 years reform. We think the one prominent feature is to extend the economic reform to broader areas, which include the cultural and social mechanism, ecological civilization, democracy and the rules of law, and also the CPC, the Chinese Communist Party's own construction, system construction. I can see that 6 characteristics is in this current reform. The first one is focusing upon tough and very difficult issues, very difficult tasks. The second one is emphasizing upon people's livelihood, take care of the people's concern. The third one is the tightening the CPC's internal management, which is quite impressive to both in China and in abroad. And the fourth one is promoting fair and just judiciary systems. We correct some wrongdoings in the past, many famous cases in that area. And the fifth one is the establishing lifelong accountability in environmental protection. We attach great importance on the environmental protection in this round of reform. And finally, it's regulating effectively the duty modeling at the various government levels, which are quite impressive to the outside world. We punish so many government officials at the central level, at the provincial level, at the local level, and at the grassroots level. For the effectiveness of this reform, I would like to take some example. The first one is after the financial crisis, China is still the momentum for the global growth, as mentioned by Mr. Rod. And in 1916, China's GDP is 6.7%, and the total volume is 1.8 trillion. Our increased contribution to the world economy is more than 30%. And I think in the first half year, we can see also very healthy development in this year. The first, it's around 6.9% for GDP growth, and we can see that realize the whole year's around 6.5 is not a very tough task. Secondly, after financial crisis, China's import increased by 58.15 billion US dollars. It accounts the 20% of the total value added. It could be it become the global. The major contribution to the global trade. And thirdly, it's this round of reform, the purpose is to support to push the Chinese, the momentum of the growth from those low-cost input into those innovation driving, and keep the economy at a middle and high speed. As Mr. Rosen introduced, the share of the innovative output in the industrial value addition is advancing very continuously. I think we have laid out the overall package for the reform. The main challenge is to how to realize each of those contents, how to realize the goal. We think that the core issue is to how to deal with the relationship between the government and the market. And in the document, we mentioned that we are going to, the direction of the reform is to make the market to be a decisive role in resource allocation. And in the meantime, we also encourage to have a more efficiency government to let the government to play a beneficial role. This is a very difficult balance. We also have some many different evaluation, but I think how to make the market force into a decisive role, there's a long way to go. We haven't finished that task, and of course we also want to have a good government.
Well, maybe I can stop you there and let me maybe turn to Erin for a minute and come back to you.
Okay, I only have one last sentence.
Okay. Okay. Of course.
I think the most difficult issue, I personally think, is that when we reform SOE and how to reform the fiscal and taxation system is something remain to do. Yeah.
Okay.
Yeah.
Well,
thank you. Thank you for your patience.
Thank you so much. No, that was a very useful summary, and we appreciate it. Erin, maybe I can turn to you then, and I'm going to quote something from one of your reports because I know, so get ready. Because I think it expresses maybe not as much optimism as other people in the panel have expressed on the reform front. And this is what was said in one of your recent reports, that despite the number of reform policies released by Chinese government agencies since economic reforms began in 2013, many are still not broadly applicable across industry sectors or specific enough in an implementation detail to address foreign company issues, and few reduce market access barriers for foreign companies, and others do not clearly apply to foreign companies. So can you elaborate on this, and maybe you can express the views of the U.S. business community, how you all see this reform process and where you've seen progress and where you really see that more progress needs to be made.
Sure. Let me give a little bit of context for the quote, because I'm sure you all have been memorizing U.S.-China Business Council's reports over the years. We, for several years, tracked China's economic reforms solely through the lens of how foreign companies were being treated in those policies. So Dan does it much more eloquently and much more user-friendly than we did it. Ours was 144 pages worth of text, which I'm sure you all read in detail, to evaluate how we felt foreign companies were faring in the economic reforms. The caveat to that, obviously, is that China isn't reforming its economy solely for the benefit of foreign companies. But when you look at it through that lens, it's a mixed bag about how foreign companies have fared. There are definitely some improvements that have been made, and many of the ones that have already been noted. Certainly, the changes to China's financial system have made it easier for companies in general to be able to move money across borders and to get financing. China implemented a regulatory review at the state council level that requires each agency to review the policies that they have put out and whether they are working effectively and eliminate those that aren't. That, in principle, is a great policy, and that could be very effective since, as with any government, there's lots of policies that are on the books that probably aren't acting very effectively. One of the notable things that came out of the initial economic reforms were the creation of a variety of free trade areas that allowed the testing of many of these policies to both in terms of how foreign and domestic companies could deal with it. So in the Shanghai Free Trade Zone, for instance, the government created what we would refer to here as one-stop shopping for getting a business license, where all of the ministries that you might need to be able to be certified as a new business, you could go to one spot and be able to get your business license. That is great, and it actually showed a lot of interest of Chinese companies using the Shanghai Free Trade Zone in particular to register businesses. That in itself shows that there was an untapped market for entrepreneurship in the market. At the same time, the free trade zones were created as a testing for those areas, and there have certainly been some successes in how those policies were implemented in the free trade zones. But the promise, or at least the idea behind it, was that those would be tested in the free trade zones and then taken nationwide. And in general, we haven't seen that happen. So definitely some missed opportunities at a minimum. I would say more broadly, though, some of the areas where the economic reforms have fallen short in terms of foreign companies, while we've seen good progress generally in these sector-specific reforms that Wendy mentioned, that's been in banking and insurance and in some of the regulation of labor. We haven't seen the kind of overall change that the economic reforms were seeking. We have not seen a significant change in approach to ensure that domestic and foreign companies are genuinely being treated on the same basis. And yet the central government has noted that is among the goals that are coming out of these, or that are set for these policies. SOE reform, I think, is an important part of that, because where China has succeeded best in its economic development has been the areas where it's had genuine competition. Manufacturing was largely open to foreign investment when China joined the World Trade Organization. And I think we can all agree that China is a global leader in manufacturing. But we haven't seen similar reforms in the services sector, and certainly even areas where we'd like to see more competition with state-owned enterprises, that's fallen short as well. we believe that those areas hold a great deal of promise for China's economy, and so they're areas where the story of economic reform, I think, remains unfinished. I think one of the final areas that I'll just note is that, kind of the underlying all of this is a monumental task to change a very large economy, one that was large even before it joined the World Trade Organization and grew to its current size, and many success stories that have come out of it. If any of these reforms were easy, China would have done it long before now, and they wouldn't have had to have a massive policy on it. Mm-hmm. But I think the key here is that there's a lot of uncertainty about what happens next. Frequently here in Washington, at least, and maybe in other locations as well, there's been some speculation about whether everything on economic reform was on hold this year in the lead up to the party Congress. There's also the question about whether there really is as strong a commitment to these kind of economic reforms, and how far the government is interested in going to genuinely level that playing field. So I would say it's a mixed bag. And from our perspective, with our 144 pages of text to look at it, some positives, some backtracking, a lot of neutral policies, but ones where I think it's not entirely clear exactly where the direction is going.
Yeah, well, thank you very much. And Erin, I think you make an important clarification between the ASPI-Rhodium dashboard and the exercise that your organization is taking. Ours, once again, we're looking at the reforms based on the pledges the Chinese government made. Yours is looking at the reforms through the lens of how this.
Yes, ours is essentially the "what have you done for me lately" assessment.
Okay. I was going to be a little more diplomatic, but you made that easier. Dan, I'm going to turn to you and ask you a question, but I'm sure that you'll probably want to respond to some of the points made. But I think one of the themes that everyone has raised is the notion of policy announcements versus outcomes. And I know in designing this dashboard, that's been a real challenge, that we'll see a number of policies announced, they take time to implement, and then it also takes time to actually show up in the charts and the quantitative data. So perhaps you can share with us how you've addressed this issue in the dashboard, and maybe you can respond to some of the points that were made here that are near and dear to your heart.
Thank you, Wendy. And great comments across the board. And everyone really talked about how to judge the policy commitments being made. I very much agree with Marcus, for one, that there are some really impressive indications in the policy space right now that some good things are queued up to happen, or maybe even already starting to happen. But the problem for the rest of the world, the dilemma here, is that most of China's economic problems are unique situations. No major economy has tried to do all this at once before, ever. Really, it's a tribute to China's success that it has created a novel set of challenges where there's no guidebook to use. And so even if the policy package being discussed is perfect, we have no basis for certainty that it's going to work to address these unique challenges that China faces. But within the fund, within the OECD community, within economists who talk about these things all the time, rarely is there complete agreement about what is the best policy priority to deal with a given challenge. Take within China. There has Governor Zhou Xiaochuan at the People's Bank getting ready to someday retire, maybe pretty soon. But throughout his tenure, he has had to struggle with an internal debate about the sequencing of policy reform. Even if you agree what the right policies are, that you have to reduce capital account barriers and you have to introduce competition in the domestic banking system, there's still a huge question of which to do first. And if the only way to get competition at home is by introducing foreign competition, is that okay before you've made your domestic institution stronger? You get the idea, yeah? It's at the end of the day, even if we have confidence, and not everyone in the West does, that Beijing intends the right policies and changes, still, we have to look at the outcomes now. We don't have the luxury to think we know what the right policy mix is and what its effects are going to be. Now our policymakers are already starting to do sometimes crazy things to change our China policies and our economic policies, thinking that they understand what's happening in China. So we don't have the luxury now of guessing what this policy change is going to mean a year from now, 2 years from now. We need to go ahead and look at the outcomes taking place in performance and use that as our test. We stop there.
Aaron raised the whole issue of the 19th Party Congress and what we can expect after that. I know there's some observers who are optimistic and they think that following the Party Congress, once President Xi has consolidated his power, that he may be in a much better position to pursue reform. Others have been more skeptical. Where do you and the IMF come out?
Well, let me just preface this by saying, of course, the fund has no mandate or expertise to speculate about politics and
I kind of thought you'd say that.
And what will happen. But that being said, I think we all are looking forward to next week. We may get some clues in the appointments that are being made. I think people matter. And if certain people that we all know are elevated or are out, I think that may mean something. First point. Second, whether then the policy will really change or not, I think we will see in the December work conference. The first concrete results will come out about in December. The policies for the next year will be set down, so we will see the emphasis, even though those things are only published in March. We will be there in January and discuss it with them, so we will see that. For example, whether the growth target for next year will be softened or dropped or be more realistic. Then comes the March Congress, which will set down the 3-year program, and the third plenum in the fall. So we see new programs coming out. Judging from what the president and the current government's the revealed preference for stability, I think a reasonable baseline expectation is that things won't change dramatically. And my sense is, and then I can come back a bit to what are the authorities telling us in response to all this stuff that we're constantly telling us? We have this dialogue with them where we meet at the very senior level. Lagarde and David Lipton go there twice or 3 times a year and talk to the president and the premier and the Politburo. What are they telling us to what we are? They're quite congruent with our analysis of the problems. I think there's no real difference in assessment of what the real issues are in the savings, investment, debt, etc., etc. I think there's also no difference, basically, of view of the direction of policies and even the final outcome with some footnotes. Market orientation, all these reform directions are very congruent with what we're saying. I think the key difference is that they come back to us constantly with is A, we have a lot more time than you think. Our fiscal position is much stronger. So you cannot impose the Western metrics of an economy in terms of risk analysis and credit gaps and how fast you need to reform and the risks of a financial crisis, etc., because our economy is so fundamentally different. Our fiscal situation is much stronger. We own all the land in the country. We have a huge surplus in the balance sheet. So we can support our financial system for 10 more years, if need be. So we have not 1 or 2 years, we have 10 years to finish this. Second, we have policies in place that actually have effects. Even if we don't see it everywhere, we have 35 or whatever provinces. Every province has their SOE reform program. There are happening things on the ground that will gradually, slowly move this economy in the right direction. So I think it's more a matter of degree and speed. Fiscal deficit, they understand that local governments cannot continue to build up debt, but they also know they cannot reform it overnight, and this has to be a gradual process. The one area where I think we have some sort of orthogonal views is this whole approach of the role of the state in creating champion industries and the industrial sector and even the advanced service sector of the future in China. You've seen it in China Manufacturing 25, this whole approach of massive state support, both in terms of regulation and financial support, and putting the private sector and the state sector together. Now, there's two aspects to this. Whether this can actually be successful, I don't know, because again, China may be different, and they have shown in many areas that actually that can be successful, but it's not compatible with a level playing field and your concerns, you know, and as a fair player in the global system, that is very orthogonal to what I think is compatible with how the world wants to play.
Well, thank you. I think now we want to open the floor up. We have about 15 minutes left for this program. I'd like to take a few questions and then turn to the panelists. So we have microphones. The gentleman back there.
Thank you all very much. Lauren Hershey, I'm an attorney. I had been in the antitrust division of the Department of Justice, and I am a longtime observer of China. Goes back 51 years, actually, as a student. And Mr. Chu, I want to single you out, if I may. My professor's last name was anglicized. His last name was Chu also. And he had a degree from Columbia University, but he was a son of a KMT official. Samuel Chu, as I recall. My question is a very short one, which has to do with the process of the Party Congress having the opportunity to preview what you are releasing on November 2nd. Very short question. Through Mr. Chu or otherwise, are you going to make the slideshow available or this presentation available before the Party Congress begins on the 18th of this month?
Other questions?
I'm unaffiliated. My name is Kumar, and I had a simple question. President Xi Jinping has been cracking down on corruption, and I was wondering how big a factor is corruption in the Chinese economy?
South China Morning Post, Zhenghua Lu. We heard Marcus comment on the policy change scenario after 19th Party Congress. What other panelists' opinion on this? What's your forecast about the policy change and maybe priorities? And second question is about President Trump's upcoming visit to China. A lot of issues on the table. So maybe Minister Zhu or Erin can elaborate on what could be on the top agenda of Mr. Trump and what could be responses from Chinese side. Thanks.
Okay, well, thank you. I think we have a good set of questions here. Perhaps we can start with the last question, because there is a lot of interest, not only in the Party Congress, but what's going to come very quickly after that, and that's the president's trip to China and to Asia more broadly. Minister Zhu, if I can ask you, what is China expecting when the president comes to visit? I know these type of trips traditionally have been kind of action-forcing events. I note that there's a lot of travel and communication between our officials and our senior officials, and I would welcome your comments on how this visit could play out on the economic front.
I think both of our two countries are preparing President Trump's visit to China. The two presidents had a very good discussion in Mar-a-Lago. And after that, the two countries has already done many things. We have already established a full framework in the comprehensive economic dialogue, in diplomatic relations, and cyber security issues, and social and cultural exchanges. All those full framework have finished their task. And we also exchanged some high-ranking officials with it, like Mr. Tillerson and State Councilor Yang Jiechi. And we are also planning to have some more high-ranking officials visit to China, preparing President Trump's visit. In economic field, we are now working. One issue is 301 investigation. As Erin's yesterday, we can have the 301 investigation. But on this regard, we from a government point of view, we express very clearly that we are not officially participating in such a course because it is a unilateral one. It is according to American domestic laws, and we are more focused on the global international according to the WTO rules. But anyway, although we have some different views, we are preparing very positively for the economic and trade fruit for President Trump. We are now working on the how to proceed the one-year plan after so-called 100 days plan, and we try. The President Trump is also going along with him a big business executive team. I think many Chinese companies are also preparing to receive their corresponding executives with it. So in every details, we are going to make President Trump's visit a very successful.
Erin, can I turn to you on that issue? I mean, what would make a successful visit for your members?
So many things. I guess I would say a little bit of it probably does relate somewhat to the party Congress outcomes, because I think some of what business is looking for is seeing some greater certainty about where China's going with its policies. And if the president's state visit can be used to provide that kind of clarity, it is traditionally been an action-forcing event. The U.S. government traditionally has a variety of things that it would like to see the government that it's visiting make some progress on. It wouldn't surprise me if some of those things involve technology transfer and intellectual property rights, even if it's not in the context of 301. But I do think that combination of seeing some good deals for American companies, that would get at much of what the administration has said it's interested in terms of seeing more balance in their relationship, as well as seeing some progress on policy issues. I think that would constitute some success for this trip. In terms of the other things that I think business would be interested in, certainly seeing China move forward on some of the additional market access liberalizations that have been talked about would be viewed very positively. Several weeks ago, as I recall, the financial ministries announced an interest in considering liberalization in the various financial services sectors. And seeing China make progress in those areas, implement some of those openings for foreign companies on its own, I think would be a very positive outcome.
Can I just raise one other issue? That's the issue of overcapacity. I think that issue was, presented a real challenge at the last meeting of the Comprehensive Economic Dialogue. Do you think we'll be seeing progress on that front?
I think China took a very serious attitude towards overcapacity. I think Chinese government has already made a general arrangement for coping with overcapacity. We are going to reduce the steel capacity by 65 million tons in the next couple of years, and also we are going to reduce tremendously reduce those coal capacities. So we are, in the meantime, we also took a very positive attitude to join the international discussion. We are going to join the International Steel Forum very positively and to cooperate with the rest of the world to solve this issue. We would like to say that the overcapacity issue is not a single country issue. It's a national issue, so it requires some international cooperation.
Wendy, can I just mop up
Yeah.
a few of those other, real quick, some of those other questions? We're going to be making the full output here available November 2nd. Right afterwards is the date to look for there. That's the bad news, not right before the party Congress, but right afterwards. The good news is one of the 10 included gauges is going to be competition policy, where we'll provide a measure of whether there's convergence in your odds of getting a merger review at their equivalent of our ATD, antitrust division, if you're a foreign firm or a Chinese firm, right? And whether those are starting to come together, because there's been a pretty big gap. You've got about a 20% chance if you're foreign, about a 3% chance if you're Chinese, right?
Of getting reviewed.
Of getting reviewed for a normal merger transaction. Corruption, we don't really deal with in this study. It's impossible to track into economic outcomes, but it's a good question because it's a critical issue for implementing good reform across the board. I understand very well why President Xi put so much emphasis on this during his first term. Finally, in terms of policy change after the Congress, we just recently looked back at the odd year Congresses, the midterm Congresses in 87, 97, 2007 that are equivalent to this in some way. 87 to 97 had big bangs of change came out of them. Deng Xiaoping in 87. In 97, the state-owned enterprise reform initiatives were introduced. 2007, not so much. The global financial crisis was underway. Nobody was in the mood to talk about more big bangs at that point. We'll see. But regardless of whether there is, I hope there is, rhetorically coming out of this Congress, these measures we're looking at here are structural long-term trends. You can't turn around labor wage growth in a quarter or two. You can't change the environmental impacts in a quarter or two. The most, I think, valuable contribution of this is not to use it each quarter to make a quick judgment, but rather as a basis, a framework for conversation between Chinese officials, American officials, European and other interested parties to get back to looking at fundamental measures of economic improvement rather than just talking about our fears of one another.
Wendy, may I add one more word? China is the only one country in the world to have its specific target to reduce the capacity on steel and coal. From 2016 to 2020, we are going to reduce the steel production from 100 million to 150 million metric tons. That is our plan, and we are going to arrange those 500,000 laid-off workers, and we are going to bear some tax loss for 12 billion RMB yuan. In 2016, only 1 year, we have already reduced 65 million tons. And in 2017, we are planning to reduce another 50 million tons. Yeah, that is the correct words. So may I quote the wrong number.
Okay, thank you. Marcus, any comments on any of the questions raised on corruption, overcapacity? Take your pick.
Yeah. Quickly on overcapacity and corruption. Overcapacity, no doubt about the intention and efforts. Again, we have to remember that the central government, the center top in China is not all powerful. Often these guidelines trickle down, and then what really happens is decided at lower levels. And it's very hard for us to monitor, but we can see that in steel, for example, there's a real effort of shutting down unproductive, loss-making, subsidies absorbing lines. And this is difficult, but it's happening. at the same time, we see new production lines that are very efficient, probably world-class steel lines coming online, and we have actually seen total steel production rise in 16 and 17. Now, what the central government can do here, the question then is, are these new lines really market-oriented, or are they also huge subsidies? So I think it's a complex issue that is not just, cannot be answered easily. And I don't think there's the lack of intention, but it's more complex in practice. On corruption, I think Dan alluded to this, that this is really a key issue. When in the high days of the early 2000s, it was quite well known that the two key drivers of growth clearly were the nominal GDP targets for each Communist Party official, the competition between them to get promoted, and frankly, private wealth creation, corruption in the context of these huge investment projects that we're driving. And I think Xi Jinping, it's a very interesting recent book that was published that one of the key lessons he seems to have drawn from the fall of the Soviet Union was that the Communist Party in Russia just was becoming totally corrupt and was hollowed out. So this cancer in the system, both because it created inefficient, unsustainable growth, but also politically, it was like the pollution of the system. One can almost compare it. And therefore, this huge drive of rooting out corruption in the economic system and in the political system, I think is key for the economy as well as for the, of course, eventually the legitimacy for the CCP. And it's actually one of the most popular things in China, together with the anti-pollution efforts. So I think it is a key, important, and overall, I think, positive development, whether it's going to be successful with the systems they have, lack of independent judiciary, and so on. We all know what the issues are. But the reason for attacking it and the fact that it's being driven from the top down is quite impressive.
On that note, please join me in thanking the panel for the excellent discussion, and we look forward to our public release of the dashboard, and we hope that it's a tool that you all find useful as you continue to monitor Chinese progress on this important reform front. Please join me.
Thank you.
Oh, it's nice to be with you.
Thank you.